Hello, I'm Haider Malik, host of the MEMI Financial Group podcast. Today's topic is greener machines, bigger savings, financing eco friendly equipment upgrades. Switching to low emission or electric machinery can cut fuel and maintenance costs, enhance your reputation, and unlock rebates, but upfront investment is higher. Here's how to decide and fund your green transition. First, quantify your baseline costs. Track annual spending on fuel, filters, urea, and maintenance for each diesel unit. Older models often use 15 to 20% more fuel per hour and require costly emissions components. If you spend $15,000 per year on fuel and filters for one machine, cutting that by half saves $7,500 annually. Use these figures to build your ROI case for lenders. Next, map available incentives. Federal and provincial programs like the federal IZEV truck rebate of up to $50,000 and provincial grants in BC, Quebec, and Ontario covering 15-30% of purchase or retrofit costs can lower your net outlay. Gather program details, eligibility rules, maximum rebate amounts, and deadlines so you can align orders, applications, and financing draws. Now, review financing tools. 1. Green equipment loans. Lenders and specialty funds underwrite up to 100% of electric or low emission equipment over 5 to 7 years, often at rates 0.5 to 1% below market when paired with rebates. Strengthen your loan package with 2 to 3 years of financials, maintenance logs, and projected savings schedules to demonstrate clear repayment capacity. 2. Operating leases. Lease eco equipment for 36-60 months with maintenance often included. The lessor bears residual value risk, keeping payments predictable. At term end, swap to next-gen models, ensuring access to the latest efficiency gains without large down payments. 3. Finance leases. Functioning like installment loans, finance leases let you own equipment for a nominal fee at term end while capturing full tax depreciation benefits. Total cost of capital is slightly higher, but bundled service plans and flexible payment schedules can offset that. 4. Sale leasebacks. Sell existing late model diesel units to a finance company and lease them back using proceeds to acquire Emerald Tech replacements. You free up lump sum capital for deposits or down payments without disrupting operations. Detailed maintenance records maximize sale proceeds and secure favorable lease terms. 5. Receivables-based lines of credit. Secure a revolving line against outstanding invoices or owned equipment. Advances up to 80% of eligible receivables or 65% of asset value give you on-demand cash for deposit and retrofit costs. Interest accrues only on the drawn balance. Repay as rebates arrive or savings accrue. 6. Invoice factoring. Convert 30 to 90-day receivables into funds within 24 hours. A transport specialist factor typically advances 85 to 95% of invoice value and handles collections. Non-recourse agreements add 1-2% to fees but shield you from customer insolvency during your transition. 7. Vendor financing. OEMs such as Volvo, Mack, and Daimler often back promotional programs, 0% financing for 12-24 months or deferred payment plans. Analyze the total cost of capital, including post-promotion rate resets, to ensure alignment with your cash flow projections. Timing is critical. Structure financing so that loan or lease disbursements occur immediately after rebate approval and just before equipment delivery. Coordinate rebate applications, purchase orders, and funding draws into a seamless timeline to avoid tying up cash longer than necessary. Run a side-by-side cost-benefit analysis. Compare purchase loans, leases, and vendor programs, factoring in rebates, tax depreciation, maintenance savings, insurance impacts, and residual value projections. Model cash flows under varying utilization and energy price scenarios, then stress test for battery replacement costs or grid access delays. 3 action steps. 1. Audit expenses. List each asset's fuel, maintenance, and emissions compliance costs. 2. Map incentives. Document rebate and grant programs with amounts, eligibility, and deadlines. 3. Solicit offers. Gather quotes for green equipment loans, operating and finance leases, sale leasebacks, receivables lines, and vendor plans. Work with a broker experienced in eco projects to stack every rebate and minimize net cost. Transitioning to greener machines isn't just about compliance or branding, it's a strategic move to secure bigger savings and stronger margins. By leveraging green loans, leases, sale leasebacks, credit lines, factoring, and vendor programs, you can fund eco friendly upgrades without jeopardizing liquidity. I'm Haider Malik. Thanks for listening.